Bitcoin's price movements over the past 24 hours have been a roller coaster. It surged to $98,000, dipped to $89,000, then climbed back to $95,000. This kind of price action is what defines Bitcoin. It's volatile, and that volatility reflects the psychology of the market. People go long, they go short, they panic sell, they panic buy. They experience the emotional stress of what would traditionally take decades in traditional markets in just a matter of days. But here's the key insight. I'm not selling. I'm a beneficiary of this volatility, not a victim. I want it to be jittery. The very nature of Bitcoin's volatility is what gives dedicated holders an advantage over those who are less committed. If you can shift your mindset and see volatility as a feature rather than a flaw, you gain an edge over the market. The regulatory breakthroughs of 2024 and 2025. The year 2024 marked a historic milestone. The SEC approved Bitcoin as the world's first digital commodity. Fair value accounting became optional, and by January 2025, it became mandatory. We now anticipate the Trump administration will repeal SAB 121, a regulatory barrier preventing banks from handling Bitcoin. When this happens, every major financial institution worldwide will be able to bank Bitcoin legally and seamlessly. For 80 years, corporations have held their assets in traditional stores of value: real estate, gold, oil, soybeans, and treasuries. Of these, only treasuries have been perceived as liquid and fungible, yet they consistently fail to beat the cost of capital. But now, with Bitcoin officially recognized as a digital commodity, corporations finally have a new option. They can hold Bitcoin instead of bonds. This is revolutionary. Bonds today have a negative real yield of -10%, while Bitcoin has delivered a plus 45% real yield over the past 8 years. Even if Bitcoin's future returns were to match the S&P 500, it would still be a significantly superior choice over bonds. A corporate treasury that shifts to a Bitcoin standard transforms its capital structure, moving from a negative to a positive real yield and becoming a magnet for investment. CEOs now have the opportunity to recapitalize their companies on a Bitcoin standard, effectively shifting from repelling capital to attracting it. Bitcoin as the global store of value. Consider this scenario. 100 ultra-wealthy families across 47 countries recognize they don't trust their banks, governments, or local currencies. They don't feel the need to flee today, but in the next 30 years, that could change. So they look for the safest place to store their wealth. If God came down and said, "I'll run the bank for you. Here's a currency called God Coin with only 21 million units. It's teleportable, secure, and lasts for eternity," every wealthy family would put their money there. God Coin would outperform gold, diamonds, and Picasso paintings as a store of value. But since that doesn't exist, they seek an alternative. Enter Bitcoin, a decentralized digital bank governed by code instead of a single authority. But the key problem remains. These families don't trust each other. Even if they did, they wouldn't trust their heirs decades down the line. The only viable solution is to create a decentralized network where everyone runs the same software and verifies everyone else. Anyone caught cheating gets kicked off. This is how Bitcoin ensures security. The network collectively verifies transactions, turning electricity into cryptographic proof. With trillions of hashes securing the blockchain, the system becomes unhackable, no matter how sophisticated the attacker. Why Bitcoin's price keeps rising. Many assume Bitcoin's value comes from inflation and currency debasement. And yes, in failing economies like Lebanon or Venezuela, Bitcoin is a lifeline. But even in stable economies, Bitcoin's price appreciates for 3 major reasons. Digitization. Just as digital books, education, and entertainment have revolutionized their industries, digital capital is superior to physical assets. $1 billion can be transferred instantly across the world at any time, something impossible with traditional assets. Security and entropy resistance. Physical assets decay. Governments become inefficient. Economic conditions shift. Bitcoin is immune to these variables. It exists outside of government control and remains incorruptible over time. Scarcity. there will only ever be 21 million Bitcoin. While governments can print infinite money, Bitcoin remains a fixed supply asset, making it an unparalleled store of value. You only need to believe in one of these three reasons to recognize why Bitcoin's price will continue to rise. I believe in all three. Harnessing volatility for long-term wealth. If you're an investor, Bitcoin should be part of your long-term capital preservation strategy. The portion of your capital that you don't need for at least 4 to 10 years should be allocated to Bitcoin. Short-term capital, money needed in days or months, shouldn't be in Bitcoin due to its volatility. Bitcoin is volatile because it's the most useful asset in the world. If you need $10 billion in credit on a Saturday night, you can get it from the Bitcoin network. No other asset provides that liquidity. If you need to sell $1 billion worth of assets on a Sunday morning, you can do it with Bitcoin. Good luck doing that with real estate or stocks. This financial utility makes Bitcoin uniquely volatile. But that volatility is why it has compounded at an annual rate of 60% over the past 8 years. If it had moved in a perfect, smooth curve, large institutional investors would have scooped it all up long ago. The volatility creates opportunities for those who understand it. If you grasp the fundamental thermodynamics of capital flow, why insecure assets are abandoned for secure assets, you understand why Bitcoin keeps appreciating. People will always move from weak currencies to strong ones. The best thing that could happen for Bitcoin investors is continued volatility because it keeps the less committed players out, allowing early adopters to benefit the most. Final thoughts. Bitcoin is winning because it is a hedge against financial entropy and economic mismanagement, a digital store of value superior to gold, real estate, and bonds, the only truly decentralized financial network in history. In the future, more companies, institutions, and individuals will realize that Bitcoin is the best option for long-term capital preservation. The sooner you understand that, the more you can benefit from the economic transformation happening before our eyes. Bitcoin isn't just an asset, it's a revolution, and it's only just beginning.